A personal loan for credit card debt isn't swapping one problem for another. Done right, it's how you stop bleeding money to interest and actually get out. Do it wrong, you end up deeper in the hole. By the end of this video, you'll know which one you're signing up for. I'm Alex Gettlin with Achieve Loans. We've helped thousands of people consolidate high-interest debt into one manageable payment. And we're ranked top 3 in customer satisfaction by LendingTree for a reason. Look, if debt is living rent-free in your head, you're not crazy. Credit card companies designed this game like a casino. The house always wins, and you're stuck feeding the slot machine. Multiple cards, balances that laugh at your payments, and that creeping dread like you're pedaling uphill on a bike without a chain. What is a personal loan and how does it work for debt consolidation? Debt consolidation works by finally putting the math on your side. It's basically financial judo using the same energy that you're already putting in, but redirecting it so it actually works for you instead of against you. Credit cards often charge over 20% interest. On $10,000 of debt, that's $2,500 a year just for the privilege of staying broke. Let's say you've got 10 cards maxed out totaling $10,000. You're making minimum payments, you're being responsible, and yet the balance just stares back at you like, cute effort. You look into a personal loan for credit card debt and think, isn't that just trading one debt for another? Then you run the numbers and it's like putting on glasses for the first time. A personal loan is simple. Lump sum, fixed rate, fixed term. You wipe out the cards and then make one predictable payment. One payment, one rate, one finish line. Not 5 due dates and a panic attack. The real benefits of using a personal loan to pay off credit cards. Most people know a personal loan to pay off credit cards can lower your interest rate. But there's a fourth benefit that flies under the radar, and it's why some people see their credit score do a little victory dance within weeks. Benefit number 1, lower interest rates. Going from a soul-crushing credit card rate to a premium fixed rate is like switching from premium gas to regular, except your car actually runs better. Benefit number 2, a fixed payoff date. Personal loans have an expiration date, usually 3 to 5 years. You actually know when this nightmare ends. Credit cards are like a subscription. Benefit number 3, mental simplicity. One loan, one payment, one calendar reminder. Your brain goes from air traffic controller managing 5 incoming flights to just driving a car. Way less stressful. Benefit number 4, credit utilization magic. Pay off your cards and your credit can drop from yikes levels of 80 to 90% down to 0. And credit scores often love that. It's like your credit report just exhaled for the first time in years. The potential downsides of using a personal loan for credit card debt. Before you use a personal loan for credit card debt, there's one mistake that turns a smart strategy into a costly oversight. Downside number 1, you need decent credit to get a rate worth it. Bad credit means rates barely better than what you're paying. Downside number 2, fees matter. Origination fees on a $10,000 loan can be a few $100. It's like paying a cover charge to get into your own financial recovery. Annoying, but sometimes worth it. Downside number 3, the big kahuna, running those cards right back up. Picture this. Someone consolidates $12,000, cards go to 0, life is good. 6 months later, emergency, I deserve this purchase, random Tuesday, boom. Now they've got a loan payment plus fresh card balances. Congratulations, you just gave yourself 2 problems instead of 1. It's like losing weight and then celebrating by eating an entire cake daily. A personal loan is a tool, not a personality transplant. It doesn't fix the why behind the spending. Where and how to get a personal loan for debt consolidation. Here's exactly how and where to get a personal loan for debt consolidation without overpaying. So if you're ready to move forward, the difference between a good deal and a bad one comes down to 4 steps. Step 1, pull your free credit report at annualcreditreport.com. Know what you're working with. It's like checking the map before a road trip. Step 2, compare lenders. You've got 3 main options. Banks can have good rates if you're already a customer. They know you know them, it's comfortable. Credit unions, typically lower rates, more flexible. It's like that cool teacher who actually cares. Online lenders, Achieve, SoFi, Lightstream, typically pretty fast funding, sometimes within 24 hours. It's kind of like ordering debt relief from Amazon Prime. Look for pre-qualification with a soft credit check. That's the try before you buy option. Step 3, compare rates from 3 to 5 lenders. Then apply with the best one. This is dating, not marriage. Shop around. Step 4, when the money lands, pay off those cards immediately. This is debt surgery, not vacation money. Then, and this is critical, make it harder to use those cards again. A personal loan for credit card debt could be a scalpel or a shovel. Used correctly, save money, simplify your life, a real finish line. Used wrong, it's just more debt with better branding. Subscribe for smarter money decisions without the shame spiral. Head to achieve.com for resources how to get back on track. One smart step at a time. Thanks for watching.